Stop saving money. I'll explain that in the daily financial news. In addition to the fact that the silver tsunami is back. It's back. It's the reason that housing is going to crash, according to Meredith Whitney. Is it just me, or are the excuses for a housing crash starting to repeat? I don't know. Let's actually talk about home prices. There was something I got from Adrian yesterday about Orange County. And I actually want to walk through the math about how median home price could shockingly shoot higher. We're going to go through the math together. I want to hear if your markets are like Orange County. We, of course, will talk about Peter Schiff and his wild call about rates. It's curious, he doesn't talk about what happens to gold in this story. And we will talk about a lender who has got on Freddie Mac's blacklist. Folks, it is getting wild in the multifamily space. It will get undoubtedly wilder. These are all the things we've been talking about on this channel. And of course, we will close with some earnings. So, stop saving money. What do I mean by that? Well, folks, we heard about yesterday the fact that there is $1.08 trillion in credit card debt. It's a shocking number. It's a massive number, but by itself, there is no context, at least for me, to go, it's a problem. Now, clearly, delinquencies are up. We've talked about that. I think they're roughly 7%. But now we have a problem. The average credit card balance is just over $6,000. $6,000. That is up 15% year on year. So let's just have an honest discussion. If you are carrying a credit card balance and your interest rate is 20%, you should stop saving money and pay that thing off. And, oh, by the way, you should cut that thing up or do whatever you can to stop further spending. Now, I'm not saying don't have an emergency fund or anything of that nature, but realize if you're on this channel and you're shopping for real estate and you're looking at a 4, 5, 6, 7, whatever it is yield on your money, you can get 20% by paying that off. Now, we've had this discussion before on one rental at a time, and without a doubt, the predominant majority of you carry zero balance. Month to month, maybe you get the credit card points or rewards or whatever. But again, if you are watching this and you are somebody that's carrying $6,000 a month as a balance and paying interest, do me a favor. Let's pay that off. Let's pay that off. That would be a massive return for most people. All right. So again, and let's be clear, I use my credit card every day. I run it way up, all of that, but I pay it off every month. So again, if you are carrying a balance, stop. Just please, 25% pay that off. All right, number 2, the silver tsunami. I think I heard about the silver tsunami in 2012. This is the story about the baby boomers downsizing, getting rid of all the real estate they own, and basically crashing home prices. Apparently, according to Meredith Whitney, there's a 30 million boomers who are going to be downsizing. What I think is really interesting is there's a lot of people that get into the kind of generational thing and look at the history and all of that, but don't realize, A, we are living longer. But here's the real twist. The story, according to Meredith, and the story in 2012 was one that was really simple. Boomers are empty nesters. They are living in their big McMansions and they want to downsize. So first, let's not forget that when this silver tsunami occurs, they will be selling a big home and buying a little home, generally speaking. So I ask you, If you are a seller of one and a buyer of another, what does that mean? Well, first and foremost, it means two transactions. Hopefully that is obvious. But the real wrinkle in all of this that we need to pay attention to is, in theory, this wave of listings and buying will be going after the same entry-level first-time home. And let me ask you this. If a boomer who is now liquid from selling their big home is competing with first-time home buyers for a smaller footprint home, who do you think wins that battle? Seriously, who do you think wins? The person who could write a check or the person that's got a 3.5% down? I don't like the odds for the first-time home buyers. So we may see inventory of big homes, aka luxury, increase. I have been talking about that for quite a while. But undoubtedly, we will see the low end or cheaper end or whatever you want to call it go up massively. And the percent of cash buyers will shock you. So again, the silver tsunami is not going to be the reason for the housing crash. I think it is comical that they can't create new reasons, that they just go back to an old reason. But they have to make you click on something. Again, if you're watching Doomers and Crash Bros, please stop. I did do a screenshot for my Instagram page that I was very happy about. I have this technology called vidIQ, which allows me to see what you're watching. And about 6 months ago, all of the Crash Bros were on my channel, right? Somewhere between the top 1 and the I think it's the top 20. As of last week, there is only one Crash Bro left. All the other Crash Bros have left the feed. You guys have stopped watching them. I am so happy. I was so happy. If you want to follow me on Instagram, it's just one rental at a time. You can see that screenshot. It had things like bigger pockets, valuetainment, daily financial news, and many others. So I was really, really happy to see this. So again, the silver tsunami will likely be a silver trickle. And if there is one, it will actually increase the price of entry-level homes. How about number 3? Okay, folks, we talk to real estate brokers from across the country every week. And Adrian Hernandez was nice enough to share some Orange County data yesterday. And this frightened me. This frightened me. So here we go. In Orange County, so this is an exercise that I want you to do in your buy box because I want to know what's going on across the country. In Orange County, the median price is $1 million. Okay? So the first thing I would ask you to do is identify the median price in your market. Write it down. Then I need you to do the following thing. This is what Adrian did, and this is what scared me. Adrian Hernandez did a calculation of how many active listings are below the median. In Orange County, as of yesterday, or I think the data was October 27th, so it might be off slightly, 33% of the active listings were below the median. That means 67% of the active listings were above the median. That's a problem. That's a problem for median home price, right? Because again, I have said for a while that if you are lucky enough to be shopping for a luxury home, go get your deal, right? There are deals in Orange County that are taking $100,000, $200,000 price cuts, but they're $4 million homes, so it's 5%. That will show up on some Crash Bros channel about a $200K price cut, but it will actually pull the median home price higher. So at the end of the day, I want to know what is going on in your real estate market. Tell me the median price, tell me the percent of active listings below and above the median price, because I think we are getting more and more evidence that luxury is slowing down and entry level is still hot. And heaven forbid, we go sub 7% on 30-year mortgage rates. The low end is going to be on fire again. So again, Let's see what happens. Let me know what you guys find. I would greatly appreciate it, whether it's Texas or Florida or Ohio, New Hampshire, whatever it is. I want to know what's going across the country, see if Orange County is an outlier or if it is a trend going forward. So number 4, Peter Schiff. Peter Schiff, the ultimate gold bug. Gold is always the answer, Peter Schiff. Everything is always broken, Peter Schiff. They shut down your bank, Peter Schiff. Peter Schiff is out saying that rates are going to go higher, much higher, and stay there forever. Okay, thank you for the scary headline, Peter. Of course, he is, I really don't know. He's grasping at straws. Does anybody really think that rates are going to go higher and stay there forever? I know some of you think rates are going to 8, 9, 10%, but do you really think they're going to stay there forever? The U.S. would be bankrupt. The United States, if the Fed funds rate and lending go to 10% forever, the U.S. is bankrupt. It's just math. Just math. So the other thing, again, because we all know that Peter Schiff is a gold bug, the thing that I would ask, hey, Peter, if I can get a 10 or 15 or 20%, because again, rates are higher forever, in a money market account, why the heck would I buy a yellow rock? No mention of that, Peter. What are you doing? To that end, I did see that Bitcoin spiked again today to 38,000, I believe. Glad I have my one coin that I think Bitcoin may go down as the best performing asset in 2023. Pretty wild ride seeing that I think it started the year at like 16,000 or something. So anyways, I digress. Let's get to number 5. Getting on the Freddie Mac blacklist is not a good idea. So the blacklist is basically a timeout where you are no longer able to bring deals to Freddie Mac. Apparently Meridian Capital, which is a large and influential multifamily lender, has been put on the blacklist. This is not good. They're going to be evaluating loans and packages that Meridian Capital has put together. And if they find fraud, which they might, we could see the crumbling of yet another multifamily anchor, right? Because again, we are already seeing office and this and that. We've already seen lenders go out. Now we're going to see, the big boys get in trouble. This is what happens. This is what happens when the tide goes out. This is what happens when the tide goes out. We are in the first inning. There will be plenty of losses, and there will be a few people wearing orange, if you catch my drift. Let's talk about some earnings. We got some earnings from Disney. Where is it? Oh, here we go. Disney. Disney exceeded earnings, but missed on revenue. Remember, folks, I was an accountant. I've been telling you this for quite a while. As an accountant, I could make legal adjustments. They're called journal entries. Assumptions that could tweak earnings for a quarter or two. You can't fake revenue. You can't fake revenue. Disney missed on revenue, but they beat on profit. Yeah, let's watch that a little bit. And then we got good old Robin Hood. There was a movie recently that talked about the AMC meme stock thing. Did anybody just catch how bad Robin Hood looked in all of that? Robin Hood was not out, at least according to the movie, to protect the little guy. Great marketing and messaging, but wow. I was disappointed with how that was portrayed. And again, I got no skin in the game, never traded on Robinhood, don't have an account, but wow, the Robinhood leaders were not portrayed in the best light. I wonder if that's just movie magic or if that's really what went down. But yeah, Robinhood had a major slowdown in retail trading activity. So again, folks, a lot going on. I guess I'll give you one more. Peter Fed President Patrick Hawker thinks we need to be holding rates steady. We need to let lags catch up. And we also are not cutting rates soon. This is really the call that I think is the right one. Keep rates where they are. Let the economy work itself out. We need time. We can't have rates going like this. It doesn't really help anyone. But yeah, if we can hold rates here, we can get to the other side of this, and it will be very, very interesting. So, folks, at the end of the day, a couple of asks. One, we are down to 67 tickets for our Las Vegas event, February 17th and 18th. You want to be there. You want to be in the audience with another 250 amazing individuals doing the work. You are going to want to meet and greet the 12 millionaires that we are bringing to the event. Again, the event will be driven by you, the audience. You will be able to ask the questions. And don't miss it. Don't miss it. So again, folks, do me a favor, buy the tickets. Let's sell this thing out this month so we can get to focus on going forward. And lastly, don't forget the November special. It's time to buy the course, How to Get Started One Rental at a Time for $3.99. When you do that, I will reply to you asking what two free goodies, two free $50 courses you would like. And of course, remember, several of you have bought it the last couple of days. Remember, you get access to the private Facebook group. The private Facebook group is worth the price of admission. There are thousands of people in there ready to help, ready to network, ready to get engaged. So buy the course, start doing the work, get ready for Q1. Let's see what happens. All right, folks, take care of yourself. Have an amazing day. Bye-bye.